Have you ever heard about the Roth IRA? If you haven't, let me tell you that a Roth IRA is basically an individual retirement account under US law that is generally not taxed upon distribution provided certain conditions are met. In simple words, qualified withdrawals from the Roth IRA plan are tax-free. Moreover, growth is also tax-free. Now, Roth IRA plans are originally intended to help average working Americans save money. However, records show that several ultra-wealthy investors such as Peter Thiel have amassed vast untaxed fortunes using Roth IRAs. Well, Peter started with $2,000 contribution back in the year 1999. Now, the bad news is that Congress wants to make some changes to the United States retirement system. What's up, guys? Welcome back to Glory Investing Show. In our today's video, I'm going to tell you about the changes Congress wants to make to the Roth IRA, so grab yourself a cold drink because you will need it. I know this video is not about the stock market, but it is important to be addressed as our financial freedom is under attack. And apart from that, we will also discuss how Peter Thiel converted his $2,000 into $5 billion that are tax-free, so make sure you watch this video until the end. Also, make sure to smash that subscribe button and don't forget to hit the bell icon so you never miss any updates. Now, without further ado, let's get into this. First of all, we need to understand how Roth IRA actually works. It was the year 1997 when Roth IRA was started. It was named after one of the co-sponsors of this law that created them, Senator William Roth. The primary purpose of this law was to encourage average working US citizens to stash cash away for retirement. According to the Motley Fool's report, the incentives are attractive, boasting tax-free growth and withdrawals during retirement for those who contributed after-tax dollars to fund the account. However, you still need to watch out for a few items. First, you need to ensure that your annual income does not exceed the annual thresholds. If you're a single filer, you're not eligible to make direct contributions to Roth IRA once your modified adjusted gross income is more than $140,000. And as of 2021, contributions are capped at $6,000 for people who are under 50. And for those who are 50 or older, the contributions are capped at $7,000. If you never heard about Peter Thiel, this story alone is enough for you to smash that like button if you still didn't. In June of this year, ProPublica published a report revealing data for Peter Thiel. The report revealed that Peter invested $2,000 in a Roth IRA account back in the year 1999. At that time, it was the annual limit. The tech entrepreneur purchased 1.7 million shares of PayPal holdings using his contributions. Peter was also among the co-founders of PayPal, each share at a rate of $0.001. According to a report published by the Motley Fool on June 17th of this year, because of the Roth IRA's incredible tax-free growth and withdrawal feature, he'll be able to tap into his $5 billion Roth IRA balance 100% tax-free if he doesn't touch his investment until age 59 and a half. Although building a billion-dollar Roth IRA is not easy for most people, if you learn Peter's strategy, you could get some benefits you might have neglected. Now, one of the overlooked features of a Roth IRA plan is that you can decide to choose your favorite assets to put your contributions to work. Peter was among those who had exclusive access to shares of PayPal before this company went public. Peter went on to invest in assets within his circle of competence, which allowed the power of time and growth to deliver explosive returns over a long run. I would say that you only need to know the rules and make sure that your assets meet the parameters of a Roth IRA. According to the Motley Fool's report, you have to start strategizing now so you can tap into Thiel's ultimate Roth IRA secret. The secret sauce is being able to use the power of time, growth, and information to earn enough compounds to fund your retirement lifestyle 100% tax-free. Now, according to a report published by Bloomberg on June 24th of this year, Senate Finance Committee Chairman Ron Wyden is considering a revising proposal that would limit how much wealthy individuals can shield retirement savings from taxes after a ProPublica report that Peter Thiel has amassed $5 billion in a tax-free account. Wyden is a Democrat who controls the Senate's tax agenda. He reportedly said that he would revisit the 2016 proposal that would prevent people from contributing to Roth individual retirement accounts once they have reached $5 million in value. Okay, Not sure about you guys, but why would someone be punished for hard work and not be able to contribute and invest in tax-free account because of his wealth? What do you guys think about this? Wyden stated, IRAs were designed to provide retirement security to middle-class families, not allowing mega billionaires and billionaires to avoid paying taxes. As we continue to look at ways to make the tax code fairer and finance critical investments in the American people, I'll be revisiting this proposal. Various reports suggest that his idea to cap Roth IRA contributions would impact a narrow swatch of rich taxpayers. In fact, the Government Accountability Office published a report back in the year 2014 stating that less than 0.1% of households had aggregated IRA balances, including Roth, of $5 to $10 million. Moreover, two members of Congress are also reportedly considering major reforms. ProPublica reported on July 7th of this year that Richard Neal has said that he has directed the House Ways and Means Committee to draft a bill that will stop IRAs from being exploited. Richard said, "The House Ways and Means Committee is considering limiting the total amount of money that can be saved in tax-preferred retirement accounts. Incentives in our tax code that help Americans save for retirement were never intended to enable a tax shelter for the ultra-wealthy. We must shut down these practices." Back in 2019, Congress needed money to pay for the retirement plan tax breaks created in the Setting Every Community Up for Retirement Enhancement Act, or SECURE Act, which eliminated the stretch IRA. A report published by Forbes suggests that the congressional leaders have now proposed the SECURE Act 2.0. Senator Ben Cardin is also in favor of these reforms. His spokesperson said that Cardin now supports banning such transactions. In an email, Cardin's spokesperson wrote, "Cardin is considering reforms such as banning the use of IRAs to purchase non-public investments. Since one of the bills would ban people from buying privately held companies within a Roth IRA, you won't be able to use Peter Thiel's strategy." Cardin's spokesperson also said that it is a good starting point while protecting IRAs for average Americans. So, we now have two bills that are co-sponsored by Cardin and Neal. ProPublica's report suggests that the House and Senate bills were introduced before ProPublica launched a series exposing how wealthy people sidestep America's income tax system. These bills are currently being pitched as helping average American workers save money for retirement. And according to Forbes' report published on July 15th of this year, among the other changes that have bipartisan support in Congress are limiting IRA and 401k balances, eliminating contributions for those with incomes or account balances above certain levels, and accelerating distributions on accounts above certain levels. The report also states, Congress also might impose required minimum distributions on Roth IRAs or include Roth IRA distributions and modify adjusted gross income when calculating taxes on Social Security benefits, the Medicare premium surtax, and other stealth taxes. Anthony Scaramucci previously served as White House Communications Director during the Trump administration. He is also the founder of Skybridge Capital. He thinks that there will likely be a threshold imposed on Roth IRA accounts. So what do you guys think? Do you agree with these reforms? If you like this video, make sure you give it a thumbs up and share it with your friends. I understand that we don't talk about politics, and I personally don't like to talk about it, but when things like this are happening and people don't know about it, I feel that it's my obligation to provide information about it. Also, don't forget to share your thoughts and valuable feedback with us in the comment section below. If you have not already subscribed to Glory Investing Show, please do so, it helps us a lot with YouTube algorithm. And press that bell button so you'll be notified each time we upload an interesting video on this channel. And while you're here, click to watch one of these two videos that are appearing on your screen. We'll see you there. Take care and stay tuned.